A very good evening to all my dear students. Students, welcome to today's session, which is the second session for your chapter number 11 of paper number 5. So I hope you all have done the homework which was given to you in the last class, and the homework was very easy. You were supposed to go through the module in entirety till where we have done, that is till page number 11. So I really want answers from all of you so that we can proceed further, that whether you have gone through the module once or twice, whether you have made your notes as we have discussed in the last class. Quickly send in your replies. I can see Balam, Shamli, Adil, Priya, Pooja. These students have already joined. Students, I really need positive replies from all of you. Kuldeep is saying done. That's good. Others also please reply quickly. Adil is saying yes, done. Sham Sundar, please reply. So, students, in the last class, we started with chapter number 11, and I told you that this is an important chapter having a weightage of 8 to 10%, right? And we started our discussion with understanding the concept of ethics, need for professional ethics, right? Then principle-based approach, rule-based approach. Then we discussed about the fundamental principles of ethics for the auditors, or if you remember, we use the word professional accountant. And then we discussed about independence of mind and in appearance, and then threats to independence. So what are the various threats to independence? If anyone can quickly write in the chat box so that we can proceed with the next topic, which is safeguards to the independence. So tell me, what are the various threats to independence? So self-interest threat, self-review threat, advocacy threat, familiarity threat, and intimidation threat. So now we'll proceed further. Let me just have a look at your replies. So I can see that Balam is saying, yes, I have done. Shamli, Adil, Kuldeep, these students are saying that they have gone through the module, which is really very appreciable. So I've just given you a brief idea as to what we have already covered in this chapter, right? We are yet to cover what? The various safeguards to independence. See, students, the various kind of threats that we have discussed in the last class. So tell me, it is whose responsibilities to avoid those threats or to look after those threats, right? First of all, to avoid, and if there are threats to independence, then to take some steps, right? It is whose responsibility? Quickly reply. So Divya is saying professional accountant, absolutely correct. Adil is saying auditor, correct. Shamli is saying auditor, absolutely correct. So first and foremost, it is the responsibility of the chartered accountant, the professional accountant, to be independent, right? Why? Because see, he is giving his opinion for the interest of the public, right? And the public will have confidence. Public say, I mean the users of the audited financial statements, and they are going to have a confidence on the audited financial statements if they are sure, if they, they are 100% sure that the person who is giving the opinion, he is independent, right? So it is the responsibility of the auditor or the chartered accountant to see whether he is independent or not, right? So what are the guiding principles? So first and foremost, before taking any audit work, the auditor will see whether there are any threats to independence, right? How will he see? He'll just see whether any of the relatives is in a higher position, because it can lead to familiarity threats. He will just check whether he himself is holding any shares in the client organization, because it will lead to self-interest, threat. So he'll consider all these things applying his professional judgment, right? Now let's say if there is a threat, right? So let's say his wife, the CAA, is to be appointed as the auditor of XYZ Limited, and Mrs. A is in a senior position, right? So first and foremost, he'll see whether there is a threat to independence. Answer is yes. Why? Because the familiarity threat his opinion might get influenced, right? It may not be free from biases. Now, if there is a threat, what he can do is, first and foremost, he should desist from that work. Desist is he should refrain from that work. He should not accept that work, right? Because there can be situations where he is not in a position to give independent opinion, right? If he really wants to take up that work, then he should eliminate that threat. So let's take an example. Let's say Mr. A, CAA, who is to be appointed as an auditor of XYZ Limited, he is aware that he is holding certain shares of that company. So first and foremost, he can do what? He can just refrain from taking that audit. Secondly, if he wants to take up that audit, he should what? Try to eliminate that threat. That is, he can sell off those shares. Clear? And if that is not possible, to eliminate the threat, he should put some safeguards so as to reduce the threat to an acceptable level, right? And whatever steps he is taking, it is always advisable to document that. Why? Because it acts as an evidence that everything relating to independence has been complied with. Right? So first and foremost, he should not accept the work. He should try to eliminate the threat. And if that is not possible, he should put adequate safeguards so as to reduce the threat to an acceptable level. Is it clear? Very logical, right? So this is with respect to what? Safeguards to threat to independence, which was the topic relating to independence, which we have done in the last class, right? Now, the next topic that we are to start today is professional skepticism. This is chapter number 11, and I'm sure that till chapter number 10, you must have studied about professional skepticism somewhere or the other in your paper number 5 module, right? And in fact, in my last session also, I told you that whenever this word comes, something should come to your mind. Quickly write that in the chat box. What is that something? I gave you a symbol that professional skepticism, something should come to your mind. Quickly send in your replies. I'm waiting for your replies. Professional skepticism. Yes, Divya, you are correct. But I'm saying that I have put a symbol that this thing should come to your mind. Shamli, Adil, Divya, absolutely correct. So it is basically, just a minute. It is basically the question mark that should come to your mind. Okay? So professional skepticism, what is meant by this? So basically, during the course of audit, auditor asks management about various things. Auditor obtains a number of documents from the management. Now, it is required on the part of the auditor to apply professional judgment and also professional skepticism. So do not get confused between both the terms. Professional judgment means auditor is applying his judgment in order to analyze a situation. And professional skepticism means that he is having a questioning mind all the time throughout the audit. So what does that mean? Let's say he gets any document from the client organization and he says, let's say it is related to a debtor. He asked the management, okay, management, I want to send an external confirmation request to this particular debtor. Can you please provide me with the address of this debtor? And the client says, no, I cannot provide. Now, if the auditor is not applying professional skepticism, he'll just accept this answer from the management and he'll proceed further. But if auditor applies professional skepticism here, that is questioning mind, that is if he's alert throughout the audit and with respect to this particular situation, what does that mean? He will ask the management, why? Why are you not giving me the address of this particular debtor? So let's say management says that there is some dispute with this debtor. Again, being alert. Okay, tell me what kind of dispute. Can I have a look at the relevant papers, relevant documents, or some litigation papers with respect to this particular debtor? So are you able to accept? Let's say the company has given certain depreciation schedule to the to the client. Now, if auditor just accepts it like that and just, proceed further, he's not applying professional skepticism. So wherever throughout the auditor has any question, he should ask that to the management. He should be alert. Okay? So the word questioning mind here is very important. Being alert to the conditions that indicate possible misstatement, whether due to fraud and error, and critical assessment of audit evidence. So what is meant by that? Questioning mind is clear to all of you. Being alert is clear. Being alert to what? Any condition which indicates possible misstatement, whether due to fraud and error. So let's continue with our example. Auditor asked the management to provide with the address of that debtor. The client did not provide, right? So a question will come whether this debtor is fake, whether it is genuine, right? Why management is not providing me with this address? So auditor will further perform the audit procedure in order to, satisfy himself with reference to that particular data. And it also includes critical assessment of audit evidence. That is, whether an audit evidence is sufficient and appropriate. And so far, you must have studied that sufficiency means the quantity of the audit evidence, and appropriate means the quality of the audit evidence. Right? So, auditor should not just rely on what management is saying, right? If he feels that certain circumstances or conditions are there which can have an impact, that there can be possible misstatement, whether due to fraud and error, he should always, ask the management. So there are certain circumstances which are given, like, let's say auditor has calculated depreciation. He has obtained depreciation schedule from the management. The total of the depreciation as is coming in that schedule is different from what is coming in the balance sheet. So audit evidence that contradicts other audit evidence. Or another example can be, let's say the debtor balance that is coming in the client's organization is 5 lakhs, but the external confirmation that is obtained from the debtor, it says 6 lakhs. So he should compare. So he should be alert whenever he sees that any audit evidence is contradicting the other audit evidence, right? In our debtor case, the external confirmation that he receives becomes one audit evidence. And maybe the aging of report, or let's say the debtor balance that he gets from the management is what? Another audit evidence. If they are contradictory, he should not accept it just like that. He should be alert. He should ask question. He should apply professional skepticism. Okay? Any information which brings question with respect to reliability of document, responses to inquiry to be used as audit evidence. Whatever information he has obtained, whatever responses to inquiries he has obtained, if he gets any information which brings question to the reliability of such document, to the reliability of the responses that he has obtained from the management, he should be alert to those questions. Right? Let's say he asks the management, why are you not giving me the list? Or let's say the auditor has asked the management with respect to the list of litigations that are going uh, during the year. The management has given a list of, let's say, 40 litigations. But when the auditor goes through the legal expense account, he finds that one legal expense, that is a payment that has been made to any of the advocates or solicitors, is not included in the list that management has given. Now, the responses to the inquiries that he has, let's say he has asked the management to provide the list. Management has replied that yes, we have 40 litigations that are going on. But when he went through the legal expense account, he found that there is another 41st litigation which has not been disclosed by the management. So he will be alert, right? Conditions that indicate possible fraud, circumstances that need for audit procedure in addition to as required by the standards on auditing. So I'll explain the fourth point to you. So let's say auditor is checking the inventory. SA 501 says that whenever you have to check the existence and condition of inventory, follow all these procedures, right? After applying all these procedures also, auditor is not able to obtain sufficient and appropriate audit evidence with respect to existence and condition of the inventory. He has to apply some other audit procedures also. He has to go beyond what is mentioned in the audit procedures that are mentioned in the essay. So if such efforts are required, he will be alert. Why so? Okay. And what is the benefit of applying professional skepticism? So let's say if you're not applying professional skepticism, what will happen? Let's say there is a let's say the company has debtors to whom a discount of 10% has been given to all the debtors. Out of 100 debtors, two debtors, a discount of 30% has been given. Now, if auditor does not apply the professional skepticism, he'll just overlook, he'll just ignore such unusual circumstances. This is something unusual, na? That to the rest of the debtors, 10% discount has been given. And to this two particular debtors, 30% discount has been given, right? So if he's alert, he will not overlook any unusual transaction. So basically what we are going to study now is why professional skepticism? What are the benefits? So if auditor applies professional skepticism throughout the audit, it is going to reduce the risk of overlooking unusual transactions. Okay? Overgeneralizing when drawing conclusions from audit observation and using inappropriate assumption in determining the nature, timing, extent. This NTE is what? Nature, timing, extent of audit procedures and evaluating the results. So see, the need to apply professional skepticism is throughout the audit. Whether you are determining the nature, timing, extent of audit procedure, whether you are evaluating the result, whether you are using any assumptions, whether you are drawing conclusions, right? So if professional skepticism is not maintained, auditor is not applying professional skepticism throughout the audit, then this is going to reduce what? the this is going to increase the risk of overlooking unusual circumstances, overgeneralizing when drawing the conclusions, and using inappropriate assumptions in determining the nature, timing, extent of audit procedure and evaluating the results, right? So basically, see, wherever auditor has doubt, he should investigate. He should modify or perform the additional audit procedures, right? Wherever he has any doubt with respect to the reliability of any of the information which is to be used at audit evidence, he should investigate or modify or perform modified or additional audit procedures, right? Now, see, students, let's say the auditor is applying professional skepticism. So will it mean that he'll keep on asking questions with respect to each and every document? Why is this document? Why have you done this? Why haven't you done this? So basically it means that auditor is not as such expected to disregard the past experience of honesty and integrity of management and those charged with governance. See, let's say auditor is doing a recurring audit with respect to a particular client. That is, he was the auditor in the last years also. And he is sure that this particular client is honest. This particular client is going to provide me information which is absolutely correct and there is no fraud or error. So auditor is not expected to disregard this fact. But yes, this belief that this management or those charged with governance is honest or and have integrity, it will not relieve the auditor to maintain professional skepticism. So basically, what does that mean? So if you see, these last 2 points are just opposite. First point says that he's not expected to doubt everything, that is to disregard the past experience of honesty and integrity of management, those charged with governance. And the last point says that the belief that management and those charged with governance are honest and have integrity, it does not mean that you will not apply professional skepticism. So based on in fact, how can I summarize is, based on the professional judgment, based on the circumstances, auditor will apply the professional skepticism throughout the audit, right? So let's say I give you a question that what is meant by professional skepticism. give certain examples, and what is the benefit of applying professional skepticism. Now tell me whether you are able to understand the three concepts. Quickly send me your replies with respect to professional skepticism. So Shamsundar, when we say that, so Shamsundar is saying, is investigation possible in audit? See, when auditor has a doubt, see, audit and investigation are different. Okay? But when he is having a doubt, when we are using the word investigate here, we mean that check it in further detail, right? So basically here, go by principle based approach. Are you able to understand? The intent of using investigate word here, it does not mean that instead of audit, start doing investigation. It basically means that if you have any doubt with respect to the reliability of the information, uh, conduct a further examination. Okay, is it clear? So here your concept of principle based approach and rule based approach. So if you go by rule based approach, it will give you the impression that now auditor will start investigating and audit becomes investigation. But no, consider the principle based approach, and our purpose here is just to say what, that in case of any doubt, conduct further investigation. Okay, whose doubt was it? Let me just have a look and then we'll proceed further. So students, tell me, professional skepticism, the three questions that I have told you at the end, are they clear? Sham Sundar, absolutely, now it is clear. Good. Shamli, Sham Sundar, Divya, Balam, these students are saying understood. Others also please reply so that we can proceed further. So today we have done safeguards to independence, and the next topic is what? Professional skepticism. Let us just have a look at few questions with respect to professional skepticism and in fact threat to independence that we have just completed today from your module. So we are on page number 11.13. Quickly. So illustration number 3 and 4 I have given to you as homework. Okay, just go through illustration number 6. So anyone, if you are having any doubt in illustration number 3 and 4, please let me know. Illustration number 5, I think we have done, sorry, illustration number 4 we have done in the last class, and 3 and 5 was your homework. Anyone having any doubt with respect to test your understanding 3 and 5 can message me, and otherwise go through test your understanding question number 6. Question number 6. So the auditors of a company have only relied upon management representation letter regarding treatment of certain tax matters under appeal by the company. The auditors have not carried out any audit procedure to justify management's treatment of the said tax matters under appeal in the financial statements. What is lacking on part of auditors in such a situation? I need answers from all of you. Kuldeep, please explain your query. Balam, absolutely right. Bala, absolutely right. Shama, absolutely right. Adil, absolutely right. Kuldeep, please explain your query. So see, test your understanding. 6 on page number 11.14, it basically says that the auditors of company have only relied on management representation letter regarding the treatment of certain tax matters, and the auditors have not carried out any audit procedure to justify the management treatment. So basically, whatever management has given, they have accepted that, right? What is lacking on part of the auditor in such a situation? So it is what? Professional skepticism. Why? Because management has given just what? A representation letter. nothing else, right? So they should have asked the management and they should have obtained sufficient appropriate audit evidence. Because see, professional skepticism also includes what? Critical assessment of audit evidence. And here the audit evidence is just the management representation letter. So they have not analyzed as to whether it is sufficient and appropriate. So that means there is what? Lack of professional skepticism on the part of the auditor. Is it clear, everyone? Is it clear? Yes, Kuldeep, you are absolutely correct. So Kuldeep has given the answer. Auditor only relied on the management representation, which is not correct. He need to undertake further check. Absolutely correct. ठीक है? Any doubt in test your understanding 3, 4, 5, 6? Quickly send in your replies. Then we'll be starting with essay 210, which is agreeing the terms of audit engagement. So everyone is saying it is clear. That's good. So let us proceed further with essay 210. So first of all, students, tell me what is an audit engagement? Send in your replies. What is an audit engagement? Quickly, I'm waiting for your replies. Audit engagement. Very simple question I have asked. You are on the verge of completion of this syllabus. So audit engagement must be clear with you. So Divya, I have not asked what is an audit engagement letter. I'm just asking you what is an audit engagement. So basically an engagement between auditor and the client. So whereby the client is engaging auditor to do some audit engagement. As simple as that, audit engagement, right? Now, the work is to be done between the auditor and the client. So auditor will be doing some work and the information will be provided by the client and the auditor is going to give the report to the client. Okay? Tell me, is there a need to enter into any agreement before starting the audit? Quickly tell me my first question with respect to essay 210. Kuldeep is saying yes. What else? Divya is saying yes. Shamli, Virali are saying yes. Absolutely correct. Just, apply the understanding you have had so far and tell me, what do you think should be there in the audit engagement letter? First of all, who are going to sign the engagement letter? Tell me. Quickly send in your replies. Who is going to sign the engagement letter? So the engagement letter will be sent by the auditor to the client. Okay? It will be sent by the auditor to the client. Now tell me, what do you think should be the content of this audit engagement letter? The content. And also tell me, what is the purpose of such audit engagement letter? I asked you in the very beginning that should there be any agreement that should be signed? You said yes. Why? Why this agreement should be signed? So Adil has written absolutely correctly. He said that to reduce any misunderstanding. And when I've asked you what all should be the content, Kuldeep has mentioned objective, scope, time. Bala has mentioned auditor's responsibility, management's responsibility, scope. Then who else? Saipa has written objective, scope, responsibilities of auditor, management. Absolutely correct. Okay. So this is what is essay 210 is about. So what is the name of the essay? Essay 210, and the name is Agreeing the Terms of Audit Engagement. Agreeing the terms of audit engagement. And I've told you what is audit engagement, where the auditor has been engaged to conduct the audit of a client organization. And what is meant by terms, the way you have given the example, like the responsibilities of both the parties, the objective, right? So what all are there, we will discuss further as and when we will, go through this essay 210. Before, discussing essay 210, let us just have a look at a sample agreement which is given in your module on page number 11.17. Page number 11.17, example of an engagement letter. So see, it is given by whom? By the chartered accountant. Okay? And it is given to whom? So the auditors are giving it to whom? To the company, to the client organization. Just a minute. To the client organization. Is it clear? Now, what all are the content? The objective and scope of the audit. We will go through this one by one. The responsibilities of the auditor. The responsibilities of the management. The fees. The reporting. And then it is signed by whom? The chartered accountant. That is the auditor. Okay? And who is sending this? I'll just show it to you. The relevant line, just a minute, 9B. Who is sending it to whom? So it says, the audit engagement letter is sent by the auditor to his client. Is it clear? So just have a basic understanding. Then we will go clause by clause of essay 210. Right? So we have seen, just a minute. So we have seen that the audit engagement letter is sent by the auditor to the client, right? And whereby it is explained that what is the scope and objective of audit. So why are we mentioning all these things? So as to avoid any confusion or misunderstanding. So it should not happen in future that, let's say, you have entered into an agreement with a client organization whereby, let's say, these things are not mentioned. And when you are giving a report to the client organization, the management is saying, oh, you were supposed to, let's say, do the bookkeeping also. Or you were supposed to comment on the internal control also. Or give a report with respect to internal control also. So this should not happen. Okay? So objective and scope. Scope means what is included, what is not included. Right? And why, what is the objective of the audit? Why the audit is being conducted, right? So if you just quickly read the engagement letter, after reading the engagement letter, your entire essay 210 will be clear. So in the engagement letter, under the heading scope and objective of audit, the auditor will mention to the client organization. So it is mentioned to the board of directors of Pristine Products Limited that you have requested that we audit the financial statements of Pristine Products, which comprise balance sheet, statement, cash flow, notes to accounts, including a summary. We are pleased to confirm our acceptance and understanding of the client. The objectives of our audit are to obtain reasonable assurance. So here, see, we are clarifying that it is not a guarantee. It is what? It is a reasonable, just a minute. It is a reasonable assurance. It is what? It is a reasonable assurance about whether financial statements are free from material error. And then we are also explaining as to what is reasonable assurance. So can you see what is the purpose? To avoid any confusion or misunderstanding, we are also explaining what is reasonable assurance, right? We also are highlighting on as to what can be a misstatement. It can be either due to fraud or error. Okay? So this explains what our objective and scope of audit. Then the auditor's responsibility. So we are mentioning here that we will be conducting the audit as per the standards on audit that has been issued by ICAI. Okay? And then see, we are telling them that we are going to apply our professional skepticism and our professional judgment throughout the audit. So the management cannot say that why are you asking me question again and again? Why are you asking me for the documents again and again? See, are you able to just correlate this with the discussion that we just had? And if you remember, I told you that in my last class that whatever you are studying in your audit subject and whatever you are going to study in your finals also in audit, exactly the same you will see when you will conduct the audit in the practical life situation. So this is the format that is always followed, right? And see, we are telling the board of directors of the concerned company that we will identify and assess the risk of material misstatement. Tell me, what is the relevant essay in this regard? If anyone remembers, the relevant essay with identifying and assessing the risk of material misstatement through understanding the entity and its environment. So I've told you the name of the essay. What is the relevant essay number? Archana, absolutely correct. I'm impressed. Others also please reply. Adil, Shamni, absolutely correct. Essay 315. Okay. So, and then see in the next point also, we are telling them that we will obtain what? An understanding of the internal control. Okay. And we will communicate you what? The significant deficiencies in internal control. So we are, telling the management each and everything so that there are no confusions. We will evaluate the appropriateness of accounting policies. We will conclude on the appropriateness of management's use of going concern. See, the going concern is the responsibility of the management. Whether the management's use of going concern is appropriate or not, this is auditor's responsibility. So we are mentioning each and everything. Okay? And see, if you can see here, we have also mentioned future events or condition may cause the company to cease to continue as a going concern. So we are mentioning each and everything. We will evaluate the overall presentation, structure, content of the financial statements. So are you able to understand? Auditor is mentioning each and everything. And last but not the least, we are telling the board of directors of the company that see, there can be inherent limitations of audit also. So we are mentioning that because of the inherent limitations of audit, there is always the risk that any of the misstatement may be not detected. So basically we are saying what? That we are obtaining what? Reasonable assurance. So are you all able to understand what is the purpose? I think after going through the engagement letter in detail, you will be able to understand as to what is the objective, what is the responsibility of the auditor with respect to SA 210. Okay? So far we have studied what? Who will write it? Auditor. To whom? To the client. And here it is to the board of directors of Pristine Product Limited. And what all will be mentioned? First of all, the objective and scope, that we are going to audit so financial statements, components of financial statement, and that we accept this assignment. Our objective is to provide you reasonable assurance. We'll also explain what is reasonable assurance. We'll also tell them misstatement concept, right? Then the responsibilities of the auditor. Okay, is it clear? Now comes the responsibilities of the management. Okay. Now, students, with respect to essay 210, a very important topic is there, which is preconditions of audit. What is meant by that? See, let's say the management says that while discussing with the auditor and before starting the audit, they are discussing, and the management says that, see, you have to conduct the audit of our financial statements, and we are not preparing the financial statement, you will prepare them. So should the auditor accept the assignment? Quickly tell me. Yes or no? Yes or no? Archana is saying no. Others, Bala is saying no. Others also please reply. Divya, Adil, Aditi, absolutely correct. Shamli, absolutely correct. Right? And let's say they are discussing, management and auditor, and the management says that, see, these are our financial statement, we have prepared them, but you cannot discuss anything with our employees. You cannot, you are not supposed to have access to our employees. So should the auditor accept the audit engagement? The management is telling them that this is the data we have provided, further no data will be provided. Quickly tell me yes or no. Absolutely correct. Answer is no. So before starting any audit work, first of all, this agreement will be signed before starting the audit work. So we will tell the management that, see, this is your responsibility. Do you acknowledge this? That is, do you accept this? And do you understand that this is your responsibility? Okay? So see, it says that, so we are telling to the board of directors of Pristine that our audit will be conducted on the basis that management and those charged with governance, they understand, they acknowledge and understand that they have the responsibility with respect to what? Preparation of the financial statements as per the applicable financial reporting standards. That you are required to prepare the financial statement. It is not happening that we are first preparing the financial statement and then we are conducting the audit of your financial statements. Okay? Acknowledge and understand means what? Acknowledges the management or those charged with governance, they accept it and they understand it also, right? This includes the responsibility for preparation of financial statement, for selection and consistent application of the accounting policy, and for making judgments and estimates. I'll just highlight: for the preparation of financial statements, for selection and consistency of accounting policies, and for making judgments and estimates. Okay, so it is whose responsibility? Management. So what will auditor do? Auditor will check whether these are appropriate or not, right? Who is responsible for implementation of internal control? Quickly tell me, is it the auditor or the management? Quickly tell me. Kuldeep, Adil, Shamli, Divya, Aditi, absolutely correct. It is the management. So here we are going to tell the management, or we are going to remind them that, see, internal control as or management determines necessary. It is whose responsibility? It is the responsibility of the management. Clear? Then we will tell them that, see, you are acknowledging and understanding that it is your responsibility to provide us with what? Access at all times to all the information, including books, accounts, vouchers, and other records. So the example that I gave you, I was talking about this, that if management says, see, we will not these are the financial statement, we are not going to give you any books, records, or any access to any individual. You cannot discuss within the entity with any of the employees. So the basis is not there on which you are going to conduct the audit. You will not accept that. Okay? So that is why everything is required to be mentioned in the agreement, right? So as to avoid any confusion or misunderstanding later on, it should not happen that you started the audit and management says that, look, we are not going to provide you with any books or vouchers. Okay. Then access to all information. The next point says the additional information. So first point says all information that has been used by the management preparing the financial statements, right? That information will be provided to the auditor. The second point says any additional information which is requested by the auditor, that we may request from management for the purpose of the audit. And last but not the least, unrestricted access to person within the entity. Within the entity. Okay? So it is saying that, see, All these are what? Your responsibility. Is it clear? Management responsibility is clear. See, management responsibility, if it is clear to you, a very important topic of preconditions of audit is going to be, very easy in understanding for you if you are clear with this management responsibility. And the next point is what? The fees. That our fees bill will be this, and it will be raised after the completion of the audit work. So whatever are the terms that will be mentioned here, and reporting, then it says that we will report to the members of the company. So you all must be aware that in case of a company, the independent audit report is addressed to the members, to the shareholders. In case of the partnership firm, it is addressed to the partners, right? So it is mentioned here, since it is the company that will report to the members of the Pristine Product Limited. And then what we are going to report, whether the financial statement reflect what? A true and fair view, right? And please sign and return the attached copy of this letter to indicate your acknowledgement and agreement with the agreements for our audit of financial statement, including our respective responsibilities. And then the signature of the auditor, the name of the member, the designation, the membership number, the firm's registration number. Is it clear? Quickly, I'll just give you a minute. Go through this agreement, the engagement letter again. Just have a look at the format. Then all the questions that I've asked you, that who will issue it, who will sign it, by whom it will be sent, what all will be included, everything is going to be clear to you. I'm going to give you next 1 minute. And before that, if you have any query, please send it to me with respect to the topics that we have covered so far. So this engagement letter is given on page number 11.17 of your module. Please go through it for a minute. Is it clear? Go through the engagement letter again. So by the chartered account, the auditors or the chartered accountants. So it is basically on the letterhead of the chartered accountant. So this is basically what? The letterhead. The objective and scope, the responsibilities of auditor, the responsibilities of management, and then our fees, the reporting requirements, and then a request that please sign and return the attached copy to indicate that you have acknowledged and you have agreed to all these things, and then signatures by the auditor. Quickly tell me, is it clear? Aditi saying clear, Divya saying clear, Bala saying clear, Kuldeep saying clear. Others also please reply. Shamli saying clear, Adil saying clear, Archana. Yes, ma'am. Okay. So now let us start with discussing agreeing the terms of audit engagement SA 210. So once you have understood the engagement letter, the sample that we have discussed, and it is very beautifully given in your module. So just go through it. Your entire SA 210 is clear. So the name is what? Agreeing to the terms. And now you all know the terms, what are there in the engagement letter, right? And what is the purpose? See, first of all, what is the auditors? So every essay, here we are talking about essay 210, 210, agreeing the terms of audit engagement. So every essay contains the auditor's responsibility and the objective why this audit is there, why this standard is there. Objective of what? Objective of the auditor. So SA 210, it deals with the auditor's responsibility in agreeing the terms of audit engagement with management and those charged with governance. So students, I'll stop here to repeat it again that in my notes, I have used a number of, short forms. So please don't get confused. I always ask you to make your own notes, to, make summarized note. Why? Because ultimately these notes are going to help you in revising once, twice, or thrice at the time of your exams, right? Because it is actually not practically possible to, read each and every word. If you are not in a habit of making notes, you can highlight the keywords. but do something, because that is going to be, helpful to you in revising, because that is going to give you a bird's eye view of entire essay or entire concept. Okay? But if you are using my notes or if you are copying them, please don't get confused with the short forms. Okay? So it deals with the auditor's responsibility in agreeing the terms of audit engagement with the management and those charged with governance, right? So what is the responsibility? What is the, objective of the auditor? So see, auditor is going to accept any engagement or continue with the existing engagement. Why there are two words? See, if it is a new engagement for the very first time, we will say accept the engagement. Let's say auditor is the auditor last year also. Now also he is the auditor, he'll continue. So that is why accept and continue. So what is the objective? That the auditor is going to accept and continue any audit engagement. So this is not audit evidence. Please don't get confused. This is audit engagement. Only when the basis on which audit is performed has been agreed. What is the basis? That management will prepare the financial statements as per the applicable FRF. Internal control should be there. Access to all the information, additional information, right? And access to the individuals within the entity. Remember? So the basis on which the audit is to be performed has been agreed. And when you have to see whether, or in other language, I can say the preconditions for an audit are present. Very, very important topic. The preconditions. So this is what preconditions. Preconditions. Oh, I have written it in a preconditions. Right? And what is the purpose? To have a common understanding so as to avoid any confusion. Okay? Now, what are the preconditions? In order to see whether the preconditions are there or not, the auditor shall first of all determine whether the financial reporting framework is acceptable or not. Okay? First and foremost, whether the financial reporting framework is acceptable or not. Let's say the company is required to prepare the financial statement as per Ind AS, but it has not followed that. So this is the very basic preconditions. First and foremost, management should have prepared the financial statement as per the applicable FRF. Then only you are going to see now whether it is actually as per the Ind AS or the applicable FRF, right? So first and foremost, whether FRF is acceptable or not. Then obtain an agreement with the management that is acknowledges is what? That it management accepts it. It here is with respect to what? Management. It accepts and understand its responsibility for. So what are all the points? Preparation of financial statements according to applicable FRF and for to give fair presentation. For implementing the internal control which management considers necessary to enable the preparation of financial statements which are free from material misstatement, whether due to fraud or error. And to provide the auditor with access to all information, additional information, unrestricted access to persons within the entity. Students, are you able to see how I have just written the keywords, and my entire important topic of precondition is, in just 7-8 lines. And I have just mentioned the keywords. And if you just, consider this thing, that when I was explaining the concept, I was using these words only. Acknowledges, though I have told you what is the meaning of the term acknowledges, it accepts and understand. But so for you, when you're understanding the concept also, try to use these words also. Now, let's say the word applicable FRF, it is used 100 times in your module. Now, a smart student is one who, focuses his energy on learning this word, applicable FRF, applicable financial reporting framework. And please, you're not required to, you are not supposed to write short forms. You cannot write it like this, or internal control like this. You are required to write it in the entire word format, right? In the entire, sentence form. But my point here is be smart learners. Put your energy. So, audit evidence, if you just write a prefix with respect to audit evidence that the auditor has to obtain, you all know sufficient and appropriate audit evidence. The financial statements are to be prepared as per the applicable FRF. And this line also, it is so common that the financial statements are prepared so as to be free from material misstatement, whether due to fraud or error. Okay, so now for all those who says, ma'am, how to get an exemption, how to get marks above 60, 70, 80, use these words. And these are not technical language, but these are what appropriate language. Yes, you can always use your language, but concentrate, focus on the keywords. And believe me, if you just try to understand the concept in the language that is given, no extra efforts will be required. So I'll repeat these preconditions, and I'm repeating it again. These preconditions are a very important topic. So you can get a situation that so and so auditor is, discussing with the management of a new client, Hana? And the management says that the internal control will be implemented by the auditor. So what is missing? A precondition is missing. What is the relevant essay? Essay 210, agreeing to the terms of the audit engagement, right? And maybe if it is asked that explain in detail, so you are going to mention all the preconditions. So I'll just repeat it. So in order to see whether preconditions are present or not, auditor shall determine whether the financial reporting framework is acceptable or not. He'll obtain an agreement with the management that it acknowledges and understands its responsibility for one, preparation of financial statement in accordance with the applicable FRF and fair presentation. The second, implementation of internal control, which management considers necessary to enable the preparation of financial statement that is free from material misstatement, whether due to fraud and error. Plus, third, to provide the auditor with access to all the information. Now, see, here I have written the keywords only. So, but when I have understood, I know that it says that access to all the information that management has used to prepare the financial statement, additional information that auditor may ask from the management, and unrestricted access to persons within the entity. Tell me, is the topic of preconditions of audit clear to you? Because it is a very important topic. Tell me, I'll wait here for a second. First of all, tell me, is this topic clear? And also, how to, like, understanding must have been clear. Itna to I'm sure, but still, if you have any query, you can forward it to me. Apart from understanding, some part of learning should be there in the session itself. Tell me whether you are able to understand as to how to prepare this topic also, or for that, like how to prepare the theory subject like auditing and ethics. Tell me. Because believe me, it happens that students have understood the concept. But when it comes to writing, they fall short of word. Why? Because they have not focused or given their energies to, learning the keywords. Tell me, is some part of the learning also done in today's session? Quickly tell me. Divya, Pooja, Shamli, Kuldeep, Adil, Saipa, please tell me. So Bala is saying yes, clear and got the learning. Need to prepare my notes and revise multiple times. Absolutely correct. And Bala and other students also, if you'll do it today itself or at least before coming for the next session which is scheduled for Tuesday, I assure you that your understanding plus your learning of the pages that you are going to prepare in the next 2 days maximum, your learning will also be done. Saipa is also saying understood. Kuldeep is saying yes, ma'am, learn the creation of notes. So just focus your energy on keywords. Okay? And this is a very important topic, preconditions of audit. I hope it is clear. Others also please reply. Archana. Divya is saying clear. Saipa, I'll try to do that. Shamni is saying clear. That's good. Okay. So now it basically says that see how should be an audit engagement letter. Should it be in writing or oral? Should it be in writing? Tell me. Answer is yes. It should be in writing. Okay. Why? So as to make it clear to both the party about the nature of the engagement. Both the party are whom? The auditor and the client. Okay. So it will specify the scope. It will be sent by the auditor to the client. Why? So as to reduce the possibility of any misunderstanding. And letter is going to include what? See, now since you have understood the various elements of an engagement letter through a sample engagement letter, this topic is going to be very easy for you. The letter will include objective and scope of audit of financial statement, responsibilities of auditor, responsibilities of management, identification of applicable financial reporting framework for preparation of financial statement. If you remember, it was mentioned there that financial statements will be prepared as per standards, as per the accounting standards, right? Reference to the expected form and content of report. In the last paragraph, reporting. So it was form and content of report and a statement that in certain circumstances, the report may be different from the expected form and content. So it basically means that in the reporting, auditor will mention that we are going to report whether the financial statement reflected true and fair view, right? However, in certain circumstances, the report may differ from the expected form and content. Let's say the auditor has to give an adverse opinion. He has to give he has to give a disclaimer of opinion. In that case, the form and content is going to be different. So everything will be mentioned in the letter of audit engagement letter so as to avoid any confusion. Is it clear? Right? And tell me, let's say the preconditions for audit are not present. Any of the precondition. Let's say the management says that it will not prepare the financial statement as per the applicable FRF. Or the management says that we are not responsible for implementing the internal control. So what will auditor do? Tell me, what will auditor do? Though I have asked you this question earlier also. Yes, Kuldeep Bala is saying should not accept the engagement. Absolutely correct. So first and foremost, auditor is going to discuss the matter with the management. That management, tell me what is the matter. Why are you saying that I cannot have an access to the information, right? And unless law and regulation requires, auditor shall not accept the proposed audit engagement. Auditor shall not accept. Okay? In which cases auditor is not going to accept? When he feels that the financial reporting framework is unacceptable, or when an agreement is not obtained with respect to the management understanding for preparation of financial statement and implementation of internal control. So what are the 2 points when preconditions are not present? So when I say preconditions are not present, it basically means that the financial statement is not prepared as per FRF, or there is no agreement with the management with respect to what? Their responsibility for financial statements preparation and the internal control. Right? So what auditor can do? First of all, he will discuss it with the management. That management, tell me what is the matter? Why are you doing this? And then he'll not accept unless and until law and regulation requires. Right? Is it clear? Is it clear? Now, students, let's say there is a limitation on the scope of audit work prior to the audit engagement acceptance. What is meant by that? Let's say management says that, see, you are going to conduct the audit, but you cannot send external confirmation to any of our debtors, creditors, or bankers. Now, this is a limitation. Or another example can be you conduct the audit, but you cannot, verify our inventory. So this is a limitation imposed prior to the audit engagement acceptance. ठीक है. So it basically says again the answer will be same, that auditor shall not accept. So let's say before accepting the audit engagement, the management says that auditor, you cannot check our inventory. So what will auditor do? See, if the limitation that is imposed by management or those charged with governance is such that it is going to result in disclaiming an opinion. What is meant by disclaimer of opinion? Quickly tell me. And the relevant essay number also. Quickly send in your replies. See, you are on the last chapter of your syllabus. Chapter number 11. Kuldeep, nahi. Though it is in the 7th. Adil is correct. Kuldeep, Bala, the series is correct, but the number is not correct. So essay 700 tells you about the unmodified opinion and the content of the independent auditor report. And 705 is with respect to your modified opinion, right? Tell me, students, are you able to recall? ठीक है. So modified, what is meant by disclaimer of opinion? That auditor is not in a position to give his opinion. So if the limitation that is imposed by management or those charged with governance is such that that auditor will not be in a position to give any opinion, he will have to give a disclaimer of opinion. In that case, auditor shall not accept the limited engagement. Limited engagement, why? Limitation has been imposed unless required by a law or regulation. Clear? Logical? Okay. Now the next topic says that, let's say there is a change in terms of audit engagement. Change in terms of audit engagement. So acceptance of a change in terms of audit engagement. So let's say the auditor has accepted, the client has accepted, the audit work is going on. Now there is a change. ठीक है. यहाँ पर क्या था? That prior to audit engagement acceptance, if something is happening, do not accept that. If the limitation is such that it will result in auditor disclaiming the opinion. What is the next topic? It says that you have accepted. Now there is a request, the management has accepted, the audit has started. Now the request from the entity is there for changing in the terms of the audit engagement. See, there can be two situations. Either there is a reasonable justification or there is not a reasonable justification. So if there is a reasonable justification, so let's say the circumstances have changed. Your scope of audit, let's say earlier it said that you are going to check the various, let's say earlier there was VAT, then your GST, right? So let's say it says that you will check the VAT transactions and everything. And while you were conducting the audit, GST was introduced. So there is what change in circumstances. Or another example, the objective of the or the scope of the audit included that the client is going to conduct the audit of the client organization, and it is also going to visit the plants or the factories, 4 factories that are there with respect to the company. Now, let's say during the year, some new merger and acquisition has taken place, and 6 more factories have been added. So these are what change in circumstances. There may be change in fees also with respect to this. There may be change with respect to the objectives, the reporting. Anything can happen. So if the change that the management has asked for, it is out of change in circumstances, or earlier there was some misunderstanding. So if it appears to be reasonable to the auditor, then the auditor should accept it. If it is not reasonable, auditor shall not accept it. So I'll give you an example of not reasonable. So let's say Let's say the auditor is conducting the audit of the client organization and he sees that there are 100 debtors. Out of 100 debtors, 10 debtors has the maximum amount of the total debtors. So let's say 1 lakh debtors are there. 90,000 is on account of those 10 debtors, right? And the auditor is not able to obtain sufficient appropriate audit evidence. Auditor has given the external confirmation request, but he is not getting any reply, nor is he getting any satisfactory reply from the management. And now management tells the auditor, do one thing. Do not give a opinion, do not conduct the audit. Just conduct what? A review. Review is limited in its scope, and give your opinion and do not check those debtors. So now this is not a reasonable justification. Had there been any change in circumstances, or let's say earlier there was some misunderstanding, right? Then that becomes reasonable. So basically, what is reasonable? A change in circumstances that is having an effect on the entity requirement, or misunderstanding concerning the nature of service originally requested. So if it appears to be reasonable, accept that change. And what is what is not reasonable? So let's say I've mentioned an example. Let's say auditor is unable to obtain sufficient appropriate audit evidence with respect to receivables. An entity asks the audit engagement to be changed to review engagement. So you all have done what is audit, what is review in your earlier chapters. So review mein kya hai? Auditor is not going to, check all, he is not going to examine all transactions. Review is with respect, is having what? Limited scope. So here, if the auditor has been asked by the management to change the scope to a one which provide limited, assurance, or which will give too qualified or disclaimer of opinion, then this is what? Not a reasonable justification, right? So auditor should not accept that change, right? Is it clear? So basically it says that what should auditor consider before agreeing to change the audit engagement, providing lower level of assurance? So just auditor is going to see whether it is reasonably justifiable or not. If it is not, auditor is not going to change that audit work to review work. Is it clear? Is it clear? So I'll do one thing. There are a number of short topics in Essay 210. I'll just take you through what we have done. And then after, just having a look at the topics that we have done, we'll take a break and then I'll pick up the next topic out of Essay 210. So we have seen the audit engagement letter, and then we have seen that what is the responsibility to agree the terms of audit engagement with management, or where appropriate, those charged with governance. Objective is to accept or continue any audit engagement only when the basis upon which audit is to be performed has been agreed. And it basically means that whether preconditions are present or not. What is meant by preconditions? First of all, whether FRF is acceptable, and then whether management acknowledges and understands its responsibility for three things: preparation of financial statement as per applicable FRF and fair presentation, internal control, implementation of IC, which management considers necessary to enable the preparation of financial statements, which is free from material misstatement, whether due to fraud and error, and to provide auditor with access to all information, additional information, unrestricted access to persons within the entity. Clear? Why is this required? So as to avoid any confusion, it should be in writing, it should be sent by the auditor to the client, and to avoid any misunderstanding. What all should be included? Objective, scope of audit of financial statement, responsibilities of auditor, responsibilities of management, identification of applicable FRF, reference to the expected form, and a statement that form of what? Content of report, and a statement that it can be changed if required, right? And then it says that if these are not present, discuss with management. The preconditions are not present, discuss with management, and if law regulation does not require, you shall not accept the proposed audit engagement. If prior to audit any limitation has been imposed, which may lead auditor to disclaim the opinion, should not accept, unless and until required by law regulation. If there is any change in the terms of audit engagement after it has been accepted, then If it is reasonably justifiable, then only accept, like change in circumstances or any misunderstanding. If it is not reasonably justifiable, do not accept. Is it clear? Now, the next topic that we have to do with respect to essay 210 is, uh, just a minute. If auditor agrees to change, the justification is reasonable, and the auditor agrees that I'll change, then what are the responsibilities for the auditor? Okay? But in order to avoid any confusion, because there are a number of small topics in SS 210, we'll do one thing. We'll take a quick break of 10 minutes here, and after the break, I'll start with this topic. But before going for the break, students, please tell me whether whatever we have done so far in Essay 210 is clear to you. If you have any query, you can always send that to me. Okay? So let us take a quick break of 10 minutes here. Okay. So students, I hope you all are back after the break. So we were discussing essay 210 and we were on the topic that let's say there is a reasonable justification for the change in terms of audit engagement and auditor change accepts that ठीक है, I agrees to the change whatever management has suggested. So what are the responsibilities of the auditor with respect to acceptance of such change? So first of all, he'll see that whether he has any legal or contractual implications. So basically, whether legally he is required to report to someone, right? Or whether out of the contract or the agreement that he was having with the client earlier, whether out of that he has certain obligations or implications, right? And students see now the terms of audit engagement has changed, right? So now in order to avoid any confusion, whatever report he is going to, give with respect to the related service, he will not refer to the original audit engagement because the terms have changed. And if terms have changed, new terms of audit engagement will be there. So in his report, he will not refer to the original audit engagement, or he will not refer to the audit procedures that he has performed with respect to the original audit engagement, which is so, logical. Why? Because otherwise the reader of that audit report is going to get confused. Right. So they in the report that is issued with respect to the related service, he is not going to refer to the original audit engagement or the audit evidence or the audit procedures that he has performed in the audit engagement, and whatever are the new terms of audit engagement, he'll agree that and record the new terms of audit engagement in the form of a suitable written agreement. Is it clear? Is it clear? Now, my next question. Now, if auditor is in a situation that he is not finding the justification reasonable, that is, he is not willing to accept the changes in the terms of audit engagement, right? And management is not, allowing him to work with the original audit engagement. Management is saying that if you have to work with respect to the new audit engagement terms, and auditor is not willing to accept the new audit engagement terms, then in such case, again, if he has the option to withdraw from the engagement, auditor will withdraw from the audit engagement where it is possible under the law and regulation. And auditor is going to determine any obligation, either contractual or otherwise, to report the circumstances to either those charged with governance or the owners or the regulators. Hana? So, instead of cramming any such situation, just think logical. That management is saying that you cannot work on the original audit engagement terms. Auditor feels that he cannot accept the new audit engagement terms. Then what he can do? He can withdraw from the audit engagement if it is possible under law and regulation. And if he is withdrawing, also determine whether there is any obligation, either contractual or otherwise, to report the circumstances to, let's say, those charged with governance, owners, or regulators. See, this is between management and the auditor. So is there any responsibility to report to those charged with governance or to shareholders or any regulator like maybe ICAI, right? So auditor is going to consider all these, or maybe SEBI, right? If it's a listed company and the matter is such that auditor, according to his professional judgment, it needs to be reported to SEBI, then auditor is going to consider that. Is it clear? Are you able to understand the various subtopics in Essay 210, right? Now, one question from my side to you, and I think this is the last topic in your Essay 210, right? What is recurring audit? Quickly send in your replies and then I'll take up all your queries relating to Essay 210. What is recurring audit? Continuation of audit engagement. Audit conducted year by year. Kuldeep, Bala is saying. What else? So recurring audit is what? What? When the auditor is performing the audit year on year and it is not a new audit for the auditor, right? Now, tell me, in such a situation, is it necessary to send the terms of audit engagement, to sign the terms of audit engagement each year? Let's say the auditor it is a proprietorship firm and it is appointed for a period of 5 years. So is it necessary to sign and sign and send the terms of audit engagement each year to the client? Quickly tell me, yes or no? No, Sham Sundar is saying. Once decide for few years, Kuldeep is saying, Adil is saying yes, Shamli is saying no, Bala is saying based on changes to the company, Bala, correct. Divya is saying yes. See, when the audit is conducted on year-to-year basis, that is in case of a recurring audit, first and foremost, that the auditor may decide not to send the audit engagement letter or other written agreement each period. The auditor may decide not to send the new engagement letter or other written engagement letter each period. Is it clear? Now, but where the auditor feels that there is some misunderstanding with respect to, let's say, the objectives or scope of audit, or let's say the responsibilities of the auditor, right? Or let's say there is a change in the senior management who has signed the engagement letter. If you remember in the audit engagement letter, when at the last the auditor signs, he also mentions that please send back a signed copy of this. The person, let's say the CEO of the company or the CFO of the company has signed it, and now that person has changed. Now tell me, is should the auditor send a new engagement letter? Saipa, absolutely correct. Divya, correct. Adil, correct. Sham Sundar, correct. Others also, please reply. Archana, please reply. Archana has replied. Yes. Archana is saying if top management changes. What else? Others also, please reply. So absolutely correct, right? So the thumb rule is what? The auditor may decide not to send a new engagement letter each year, right? But where he feels that there is a need to remind the entity with respect to the existing terms of audit engagement, if he feels that there is what any change in circumstances or misunderstanding, he will send the new engagement letter to remind the entity of the existing terms. So what can be the various situations where the auditor may decide to, send a new engagement letter? So do one thing, you tell me. One, I have told you that there is a change in a senior position. What else? Tell me quickly. Change in rules and regulation. Kuldeep is saying change in business. What else? What else? Archana is saying what change in laws, regulation regarding fees, top management changes, right? Change in owner, Kuldeep is saying. Bala is saying changes in essay. Saipa is saying change in nature, size of business, fees. Divya is saying correct, right? So what are the situations, what are the factors where the auditor finds it appropriate to revise the terms of audit engagement or to remind the entity of the existing terms? See, where there is an indication that the entity misunderstands the objective and scope of audit, right? So if the entity misunderstand, auditor feels that the entity has a misunderstanding, they are not able to understand the terms of audit engagement. This year he faced this. So next year when he's going to, conduct the audit next year also, before that, he may, send the new terms of audit engagement with detailed explanation, right? or when there is any revision or special terms of audit engagement. So let's say this year the company has told the company management has told the auditor that this year we have entered into mergers acquisitions with so and so company. So there will be extra work, there will be change in the objective and scope of audit, recent change of senior management, recent change of ownership, change in size and nature of the entity's business, right? Let's say Reliance is there, you are conducting the audit. This year they have introduced, let's say, jewelry business also. And earlier it was not there. Take an example of this. Okay? Change in rules and regulations, change in applicable FRF, or change in other reporting requirements. So I can see that many of you have answered correctly. You have already, sent these answers in the chat box, which is a good thing. That means you are able to understand. And yes, Sham Sundar, if there is, let's say, demise of the engagement partner, yes, those who have signed the terms of audit engagement, if they have changed for whatever reason, there will be it becomes an appropriate reason for revising or reminding the entity of the existing terms. Okay, so with this we have completed essay 210. Quickly send me any query if you have with respect to essay 210, and then before starting with the next topic, which is audit quality, whereby we'll be studying about SQC1, Standard on Quality Control 1, and SA 220, um, 220. So, but before doing that, I just want you all to send me the queries if you have any relating to SC 210. And also, students, I'll like to tell you here that if you have to understand or you have to revise SC 210, first step should be go through the sample of the audit engagement letter that is given in your module on page number, I think it is 11.1, 11.17, right? And then go through the topics. Your, efforts in learning, understanding is going to be very less, right? Once you have understood the example of the engagement letter that is given on page number 11.17. So before starting with the next topic of audit quality, I want you all to solve certain MCQs with me. And before that, I'll just have a look at your queries. Kuldeep, you have mentioned sample one, so I'm not able to understand your query. Please elaborate. Yes, sample is given on 11.17. So go through it in order to have a better understanding of essay 210. And students, many of you always ask me that, ma'am, is it necessary to learn the essay number? Is it necessary to learn the essay name? See, I always tell my students, see, if you write the correct essay number and the name, it is always going to be a, positive point. But do not write wrong essay number or names. If you're not sure, if you have any confusion, do not write that. It's better, to give the correct essay number. And I think learning of essay numbers, names is not difficult as such. If you've gone through the module once, twice, they will themselves get imbibed in your mind. Okay? But yes, do not write wrong essay numbers. Okay? So now let me just open the file of MCQs. Just give me a second. Are you all able to understand what we are doing? Tell me, meanwhile, I'll just share the file with you. Kuldeep is saying yes, that's good. So in our last class, we have done till MCQ 6th. Now, so the MCQ that we are going to discuss just now, they are with respect to professional skepticism, the topic that we have covered today, and essay 210. Okay? These are very simple. Abhi, the MCQs that I have included today, these are not as such, these are based on concepts. not practical situations. Practical situation MCQ we'll be discussing in the next session. These MCQs I have prepared so as to, make sure that your concepts are clear. What is contained in professional skepticism, what is contained in SS210, that should be crystal clear to all of you. Okay? Now, MCQ number 7, please go through it. Seventh. Send in your replies. So, professional skepticism primarily requires the auditor to trust the management representations, maintain an attitude of questioning mind, perform audit procedures only if fraud is detected, rely heavily on internal controls. Tell me. So, for 7th, many of you have answered, which is correct. Adil, Sham, Shamili, Sapia, Saipa, Kuldeep, Divya, Priya, correct. Okay. So what is the question? Professional skepticism primarily requires the auditor to trust management representation? No. Maintain an attitude of questioning mind, which is the correct answer. Because we know that professional skepticism means being alert and maintaining a questioning mind throughout the audit. Okay. 8th, which of the following situation indicates a need for increased professional skepticism? When should auditor be highly alert throughout the audit? High quality internal controls, unusual transactions near year end, strong management integrity, consistent financial results with prior years. Tell me for 8th, let me just have a look at your answers. So few students have answered till 10th, till where they are able to see the questions. That's good. So for 8th, I can see that Kuldeep correct, Adil correct, Pooja, Shamli, Sham, Sundar, Bala, Divya, Saipa, Priya, absolutely correct. So which of the following situation indicates a need for an increase in professional skepticism that the auditor need to be highly alert? So if there are high quality internal control, no, that will not lead to increased professional skepticism. Strong management integrity, no. Consistent financial results, no. In fact, in these situations, auditor can rely, right? Then unusual transactions near the year end, yes, because something unusual is there. So he need to be alert for all those transactions or all those, unusual transactions. Clear? So the answer is B. Now, with respect to 9th question, an auditor exercising professional skepticism will accept management explanations without further inquiry, avoid using external confirmations, consider contradictory evidence, ignore inconsistencies in audit evidence. So students, I told you that these MCQs are for the purpose of your conceptual clarity. So if you'll see that after solving these three MCQs with respect to professional skepticism, minute points with respect to professional skepticism are going to be clear to all of you. So conceptual clarity will be there. Practical based situation we'll discuss in the next class. So with respect to ninth, let me see who all have answered. Divya correct, Priya correct, Bala correct, Saipa correct, Shamni correct, Pooja correct. Shyam Sundar, please check your answer. Recheck your answer. So what is the question? It says that an auditor exercising professional skepticism will accept management explanations without further inquiry. Answer is no. Why? Because professional skepticism means that you are going to inquire, right? Avoid using external confirmations. No. If you are alert, you are applying professional skepticism, you will use external confirmations. Consider contradictory evidence. This can be correct answer. Let's see the fourth. Ignore inconsistencies in audit evidence. Answer is no. Because when auditor is alert, he'll definitely give importance to any inconsistency. He will definitely give importance to external confirmation, and he'll definitely, not accept this without further inquiry. So an auditor exercising professional skepticism he will consider the contradictory evidence. Right? If you remember, we have seen the various examples which will lead to increase in professional skepticism, and one of those is what? Contradictory audit evidence, where I gave you example that the balance that is shown in the books of accounts of the client with respect to debtor is 5 lakhs, but when you received an external confirmation from that debtor, it shows 6 lakhs. So there is inconsistency, contradictory evidence. So what is the reason? Auditor is going to inquire and thereby applying more professional skepticism. Students, is it clear? Professional skepticism is done now with respect to essay 210, question number 10. The primary objective of essay 210 is to plan the audit appropriately, to obtain sufficient appropriate audit evidence, to establish whether preconditions for an audit are present, or to report on financial statement. Tell me, and I'm telling you again, these are just for your conceptual clarity. So with respect to question number 10th, who all have answered? Let me just see. 10th, Archana correct. Then Priya correct, Sham Sundar correct, Bala correct, Saipa correct, Pooja correct, right? So the primary objective is to plan the audit. No planning. Tell me what is the essay number with respect to planning? Tell me what is the relevant essay number with respect to planning? With respect to planning, then with respect to audit evidence, and then with respect to report. Tell me, Bala, absolutely correct. So just write planning, the essay number. Audit evidence, the essay number. Report, the essay number. See, if you are able to, send the correct answer, this is going to increase your confidence. Bala, absolutely correct. Adil, correct. Sundar. Sham Sundar, this is with respect to which thing? Is it planning, audit evidence, or report? Kuldeep, correct. Adil, you also mentioned this is with reference to what? Bala, correct. Correct. No. Kuldeep, check your answer. So, with respect to planning, there is essay 300. With respect to audit evidence, there is essay 500. With respect to report, there is essay 700. And in fact, other essays also like 701, 705, 706. But with respect to preconditions of audit, essay 210. So what is the correct answer? It is it is C. Clear? Go through the 11th point. Preconditions for an audit include management use of applicable FRF, auditor preparing financial statements, auditor determining accounting policies, auditor performing management responsibilities. Tell me what is the correct answer. Let me just have a look at your replies. So this is with respect to the 11th question. Saiba correct, Divya correct, Shyam Sundar correct. Kuldeep correct, Pooja correct, Shamli correct, Adil correct. Good. So preconditions means that the management is going to use the appropriate applicable FRF financial reporting framework, right? Auditor preparing financial statement is incorrect. Why? Because management preparing financial statement. Auditor determining accounting policies is incorrect. Why? Because management is going to determine the accounting policies. Auditor performing management responsibilities is also incorrect. Why? Because management will perform that. Okay. The 12th one. Go through the 12th. 12th, I can see who all have answered. Kuldeep correct. Adil correct. Pooja correct. Kuldeep, for planning, it is essay 300. Essay 320 is with respect to materiality in planning and performing an audit. For 12th, Shyam Sundar correct. Priya correct. Archana correct. Shamli correct. Bala correct. Saipa correct. So audit engagement letter should normally be sent before commencing the audit work, after completion of audit, only when the client is new, only when the auditor resigns. So after completion, no. Why? Because the purpose of sending the engagement letter is to, avoid any confusion with respect to objective scope. And it is always better to clear that before starting the audit. Only when client is new, no. Because we have seen the terms used are acceptance and continuance of client engagement. So even if it is existing, then also only when auditors resign, no. So what is the option? Before commencing the audit work. Is it clear? Twelfth, clear everyone? Please send in your replies. Now the 13th one. Which of the following is not generally included in engagement letter? Students, listen to me here. See, with respect to with respect to the MCQs here, one point I would like to tell you is that, see, MCQs are really very simple to solve if you have the conceptual clarity. But why students are not able to, secure full marks with respect to MCQ? Because they are in a habit to read the MCQ in a hurry, right? So for MCQs, if your concepts are clear, you should read the MCQ with utmost attention. Why? Just look at this MCQ that we are going to discuss. It says that which of the following is not generally included in the engagement letter, and it often happens that in a hurry students miss this important word, which is not. So see, if you just read which of the following is included, this is going to just change your answer. Okay, let's say which of the following is included, somehow the option of this is also given. So this is going to, confuse you. So read the MCQ properly. Give it a proper reading. What is required for in the MCQ. So it says which of the following is not included in the engagement letter. Is it the objective and scope of audit? No. Why? Because these are included. Responsibilities of management? No. Why? Because these are absolutely included. Auditor's responsibility? No. Because these are also there. Detailed audit program to be followed? No. This is not there. See, detailed audit program is what? A part of audit documentation that auditor prepares, that when and how he is going to, conduct the audit, what audit procedures will be performed, when they will be performed, by whom, who is going to review. These as such are not the part of the terms of the audit engagement. These are the part of audit documentation, which is the property of the auditor. Okay, is it clear? So what is the answer for 13th? It is the D, detailed audit program to be followed. Clear? Now the last MCQ for today. If management imposes a limitation on the scope of audit before engagement is accepted, the auditor should accept the engagement without concern, decline the engagement if limitation will lead to disclaimer of opinion, ignore the limitation, issue an unmodified opinion. Quickly send in your replies with respect to 14. Let me just check who all have answered and whether you have answered it correctly. With respect to 14th, Kuldeep is correct. Priya correct. Sham correct. Sham Sundar. Archana is correct. Divya is correct. Bala is correct. Pooja correct. Shamli correct. Who else? Send in your replies. Saipa correct. So it says that if management imposes a liability on the scope of audit before engagement is accepted, the auditor shall accept the engagement without concern. No. Why? Because there is a limitation on the scope of audit. Decline the engagement if the limitation will lead to disclaimer of opinion. This we will see whether it is correct or not. Ignore the limitation. No. Issue an unmodified opinion. No. See, even if let's say the option that is given to you is issue a modified opinion, okay, it may appear to be correct to maybe to someone of you. See, students, it says that before the engagement is accepted, so auditor should not accept that, okay, I'll issue a modified opinion. I'll accept it, I'll issue a modified opinion. No. When auditor is aware before the engagement is accepted that certain limitation has been imposed, which will lead to, let's say, a disclaimer of opinion, he should not accept that engagement. Decline the engagement if limitation will lead to what? Disclaimer of opinion. Okay? And last point, why I have changed it? Issue an unmodified opinion. As such, this option you may also get, but why I have changed it? Let's say, I'll just write it, just a minute. Let's say you get an option that auditor will give a modified opinion. So don't get confused. Even when the auditor is deciding whether to accept or not, it is not correct that auditor is thinking that I'll accept the engagement, okay, I'll issue a modified opinion. No. If there is a limitation, your professional behavior requires you not to accept that engagement if it is going to, lead to disclaimer of opinion. Okay, is it clear? Is it clear? Are we good to, go with the next topic, which is audit quality? Essay 210, is it clear to you, everyone? Archana is saying clear, Divya saying clear, Kuldeep saying clear, Shamli saying clear. That's good. Adil saying clear. That's good. Okay. So now we'll proceed with audit quality. Tell me, students, why is audit quality important? Why is, there are separate essays, or there is a, let's say, a standard on quality control with respect to audit, with respect to audit. Tell me, why is quality important, audit quality? Quickly send in your replies. What do you think? So Kuldeep is saying to achieve and maintain the professional standards of service. Who else? Please reply. Archana, Saipa, Shamli, Adil, Divya, Pooja, Bala. Give your answers also, Sham Sundar, because it's crucial for trust of intended user. Archana, correct. It gives quality to financial statement to user. Divya, correct. Maintain a true and fair view. The report is used by a lot of folks. So give confidence to, absolutely correct. Okay. So see, why is audit quality important? Because this is going to help in maintaining the confidence of the users of financial statement. And it is whose responsibility? It is the auditor's responsibility to maintain a high quality. Why? So that the confidence of the user is maintained, right? Now, students, when we are discussing about audit quality, we are going to, discuss two things. One is SQC1 and then SQC 220, sorry, SA 220, right? Both these deal with the quality control with respect to an audit, right? What is the name of SQC1? Quality control for firms that perform audit and review of historical information and other assurance and related service engagement. Students, if you just see, this is a lengthy name of SQC1, but this is not difficult to learn at all. Why? See, standard on quality control 1. So quality control for firms. It is for the chartered accountancy firm. So what is the name? Quality control for firms. This you have remembered. Now just see that with respect to, you have studied 4 types of engagements. What are those? Audit, review, and audit and review is always with respect to historical financial information, right? Then the third one is assurance, and the fourth one is related service engagement. So this is basically, I'm telling you the way how to learn, but just don't start cramming. Be smart learners. If you just have a concept in your mind that SQC1, as the name suggests, standard on quality control 1. So it is quality control for firms that perform, that you have studied 4 types of engagements. Audit and review. And audit and review is always with respect to historical financial information and other assurance and related service engagements. Tell me who all are able to learn the name of SQC1, or who all are finding it easy to learn the name after this explanation. Tell me. Tell me quickly. See, don't just cram. I'm repeating it again and again. If you'll just put in extra efforts and try to learn with your minds open. Because again, I'll repeat, it is for quality control for firms that perform 4 kind of things. Audit, review. Audit and review are with respect to historical information, historical financial information. And then assurance and related service engagement, third and fourth. Divya is fine, saying it is easy. Kuldeep is saying clear. Others also please reply. Archana is saying easy. Adil is saying yes, clear. ठीक है. Pooja is saying clear, good. ठीक है. So what we are discussing, audit quality. Why we are discussing? Because audit quality is important to enhance the confidence of the users of the audited financial statements, right? What kind of users? Debtors, creditors, investors, bankers, lenders, tax authorities, government authorities. So these are the various kind of users of the audited financial statement. And we have seen that with respect to quality control, what we are going to study? We are going to study SQC1 and SA220. With respect to SQC1, I have told you the name, that is quality control for firms that perform audits and review of historical financial information and other assurance and related service engagement. Clear? SA220. So I'll just take you to the module for that. SA220. The name of SA220 is Quality Control for an Audit of Financial Statements. It is given on page number 11.31. Quality Control for an Audit of Financial Statements. Okay, is it clear? So with respect to audit quality, we are going to discuss this in two parts, SQC1 and SA220. Okay. Now students, further note that SQC1, it is applicable with respect to all the engagements, audit, review, assurance related, and this must be clear by the name of SQC1 itself. Because what is the name? Quality control for firms that perform audit, review of historical information, financial information, and other assurance and related service engagement. So it is applicable to all. And what is the name of SA220? So we have same, the name is quality control for an audit. So that means it is with respect to, just a minute. It is with respect to audit of financial statement. Okay. So SQC1 and SA220 deal with quality control, but SQC1 is with respect to all engagements, audit, review, other assurance and related, and SA220 is with respect to only audit engagement. Is it clear? And one more thing, that SQC1 applies to the entire firm. So the language that you will see while studying SQC1 will be, firm shall establish the policies and procedure. Because the overall quality responsibility depends upon the entire firm. So the language that you are going to see and that you are going to use is, the firm shall establish the policies and procedures. However, so this was about SQC1. SA220 is with respect to the particular engagement team. So this is with respect to the particular audit engagement. Is it clear? Is it clear? So with respect to audit quality, it is the auditor's responsibility. Why? In order to maintain the confidence of the users of the financial statement, right? With respect to the quality control, we are going to study SQC1 and SA220. SQC1 is with respect to all the engagements, audit, review, and other assurance and related service. SA220 is with respect to audit engagement. SQC1 applies to entire firm, and SA220 is with respect to that particular audit engagement. Is it clear? And in fact, you will see that with respect to SA220, engagement partner is used. That engagement partner will do this or do that. However, SQC1 में क्या लिखा है? The firm shall establish the policies and procedures. Tell me, are you able are you all able to understand what we are going to study and what is the difference between SQC1 and SA220? Then we will proceed further. Kuldeep, I'll answer to your query, just a minute. So one more thing is there, see. Just give me a moment. So the relationship between SQC1 and your SC220, I'll just show it to you. Just a moment. The query that Kuldeep has raised. So I made a chart if I'm able to find that. So I'll do one thing, I'll share that in the next class. But meanwhile, so Kuldeep has a query that he's saying, let me just, he says SQ1 is independent from SA220. See, students, when we will study SQC1 and SA220, you will see more or less the points are same. For example, SQC1 contains the firm's responsibility with respect to these points: leadership responsibilities, ethical requirements, acceptance, continuance of client relationship, human resources, engagement, performance, and monitoring. What are all these? We are going to discuss that in detail. Okay? So basically, these points. The firm's system of quality control should include policies and procedures addressing each of the following elements. Throughout SQC1, you are going to see this language, that there is a responsibility on the firm, that it should establish the policies and procedures with respect to leadership responsibilities, ethical requirements, acceptance, continuance of client relationship, human resources, engagement, performance, and monitoring. Okay. Now, with respect to SA 220, what you are going to find, and in fact, I always say that every SA contains the responsibility for the auditor. Okay. So it says that engagement partner of a team is responsible. So the responsibility is on whom? The engagement partner. He is responsible for quality control procedures of a particular audit engagement. So SQC1 is a broader outlook with respect to audit quality for the firm as a whole. So when we are talking about SQC1, we are saying that the firm should establish the policies and procedures for the entire firm. We are not talking about a particular audit engagement. We are not talking about a particular engagement that you are conducting the audit of so-and-so company. No, we are saying overall responsibilities for the firm to establish the policies and procedures with respect to various aspects. When we are talking about SA220, we are saying that with respect to particular audit engagement, the engagement partner should do that. So if you will see this line, this is the reply to your query, Kuldeep. SA220 is premised on the basis that firm is subject to SQC1. So when SA220 is to be used, it is based on the premise is what? The basic foundation that the audit firm is already subject to SQC1. That quality control, first and foremost, it is the responsibility of the entire firm. But with respect to the particular engagement, it is with respect to the engagement partner. And in fact, you will see it describes the SC220 is modeled on lines of SQC1. ठीक है. So based on the basis of SQC1, SA220 is framed, and SA220 describes the responsibilities of the engagement partner in relationship to, you will see all the same points: leadership responsibilities, relevant ethical requirement, acceptance, continuance of client relationship and audit engagement, assignment of engagement teams, engagement performance, and monitoring. Same are the points. And again, your smart learning. When you know that SQC 1 and SA 220 are based on same premise. But the language that is to be used for SQC1, it will be firm shall establish the policies and procedures with respect to so and so. And with respect to SA 220, it says that the engagement partner with respect to the particular audit engagement shall have the following responsibilities. Kuldeep, is your doubt clear? So he's saying clear. Okay. Now, with respect to SQC1, let me just take you through. So we have discussed this. So I hope you have understood that SA 220 is premised on the basis that the firm is doing what? Is abiding by SQC1, right? 220 is based on this very foundation. Okay? So SQC1 requires, see, I told you the language, the firm to establish the system of quality control to provide reasonable assurance that the firm and its personnel comply with professional standards, legal and regulatory requirements, and the reports issued by the firm engagement partner are appropriate in the circumstances. Now, this line, which we are going to discuss just now, you will see it is used repeatedly. So now what a smart learner will do, she or he will focus the attention towards, learning the keywords out of these lines. So what is meant by this? So it basically says that SQC1 requires that firm should have a system of quality control which ensures that there or which gives a reasonable assurance that the firm and all the personnels, they comply with the professional standards like standards on auditing or whatever are applicable, regulatory and legal requirements, plus the reports that are going to be issued by the firm or the engagement partner, these are appropriate in the circumstances. It should not happen that, see, let's say there is a client organization and for that the financial statement do not reflect a true and fair view, right? Instead of giving this adverse opinion or let's say qualified opinion, the auditor gives an opinion that he gives a disclaimer of opinion that he is not giving an opinion. So tell me, in such a situation, is the quality of that audit maintained? Is there any audit quality with respect to that particular report? Tell me, yes or no. The report should be either adverse or qualified. But instead of giving an adverse opinion, the auditor has disclaimed the opinion. Tell me. Quickly send in your replies. Quickly. So I have received a reply from Adil. He says, no. Kuldeep says it lacks clarity. So basically the quality is not high. Okay. Also, let us take another example that let's say SA 501 says that with respect to the existence and condition with respect to inventory, perform the following procedures, right? Now the auditor is not performing those audit procedures. Will the quality with respect to that particular inventory verification be maintained? Answer is again no. So unless and until the firm and its personnel includes the engagement team, they comply with professional standards or legal or regulatory requirements. Plus, there are two things, compliance and then the report that you are giving. So comply with professional standards and legal and regulatory requirements, and the reports issued by the firm or engagement partner, these should be appropriate in circumstances. So the system of quality control should be such that it provides a reasonable assurance to the firm that the firm and its personnel, they are complying with professional standards, regulatory rigor requirements, plus the reports issued by the firm or engagement partner is appropriate in the circumstances. Is it clear? Is it clear? So what are the various elements? And again, just see the language that will be used is the firm's quality control includes the firm system of quality control includes policies and procedures addressing the following elements. So what are these? Leadership responsibilities, ethical requirements, acceptance and continuance of client relationship and specific engagement, human resources, engagement performance and monitoring. And whatever are these policies and procedures, these should be made, these should be documented and communicated to the firm's personnel. Then if they are communicated, then only they are going to follow that. And see, today we'll not be able to discuss all these points, but I'd like to discuss one point here. Why do you think these points are included with respect to quality control? See, unless and until the leader, the let's say the audit partners, the seniors, unless and until they take audit quality as an important matter, the team is not going to consider it as important, right? So that is why quality control should have element of leadership responsibilities for quality within the firm. You are going to follow your leaders only. If they consider that audit quality should be high, then only you are going to maintain that. Same way, ethical requirement. Let's say if you are not independent of the client organization, will there be audit quality? No. Acceptance, continuance of client relationship and specific engagement. Let's say one of the engagement should not have been continued. ठीक है? You should not have accepted. Let's say there is a limitation on the scope. Will there be quality? And you have accepted it. Will there be quality? No. Human resources. The client organization is having its financial statements. Let's say it is a UK based company. IFRS is to be followed. Or let's say some technical softwares are to be followed. Your audit firm is not having the required human resources with so and so capabilities. Will there be audit quality? No. Engagement performance. The engagement performance, there is no monitoring of the engagement performance. Will there be audit quality? Engagement performance. Let's say the reports are not submitted on timely basis. Will it have an effect on the audit quality? Yes. And last but not the least, monitoring. See, you have made the policies and procedures. You have documented that. You have communicated them to the personnel, but you are not monitoring them. Let's say for quality control, you have given instruction that let's say in engagement performance, there is an instruction that within so and so time period, audit file should be maintained. But this is not happening. So will it, and you are not monitoring it. So though the policies and procedures have been made, though they have been documented, though they have been communicated, but there is no monitoring of the policies. You have made the rules, you have made the policies and procedures, you are not monitoring whether these are followed or not. So will it have an impact on the audit quality? Answer is yes. ठीक है? Is it clear? So that is why these points are there in SQC1 as well as in SC220. But in SQC1, we are going to study them with respect to the responsibility for the entire firm to establish the policies and procedures with respect to these points. Okay? And in SA220, we are going to study these points only, but with respect to particular audit engagement and responsibility of engagement partner. Okay? Is it clear? Is it clear? Quickly send in your replies. Any doubt, anyone? So we'll do one thing. We will cover all the points in the next class along with essay 220. But before ending the today's session, first of all, I would like all of you to send any replies, send any queries if you have related to the topics that we have covered. And apart from this, we are going to, just see as to what we have done today. So, in the last class, we were doing the topic of threats to independence. And in today's class, we have discussed about safeguards to independence, whereby we have seen it is the auditor's responsibility. And in case he finds that there are threat, first of all, he should desist. That is, he should refrain from working. If not, he should eliminate the threat. If not, he should put safeguard so as to reduce it to an acceptable level. Clear? Then we started our discussion of essay 210. And for that, I'll just take you through uh, this attachment, this file. Okay? And in essay 210, I've asked you to first go through the sample of audit engagement letter, agreeing, and what is the name? Agreeing the terms of audit engagement. So it deals with the auditor's responsibility to agree to the terms of audit engagement with either the management or where appropriate, those charged with governance. And any audit will be accepted or continued only when the basis on which audit is to be performed has been agreed. And what is the basis? That the preconditions are present. What are the preconditions? That FRF is acceptable and an agreement with the management. That two words are very important: acknowledges, management acknowledges and understand its responsibility for preparation of financial statement as per applicable framework, financial reporting framework and fair presentation, implementation of internal control to provide auditor with access to all information, additional information and unrestricted access to persons within the entity. Then why is this necessary? So as to avoid any confusion, it should be in writing, it should be sent by the auditor to the client to avoid any misunderstanding and before the commencement of the audit. It will include objective scope of audit of financial statement, responsibility of auditor, responsibility of management, identification of applicable FRF, reference to expected form content of reports, and a statement that there may be any different report in the expected form and content of the report as per the circumstances. And let's say if the law and regulation already describes the term of audit engagement, need not, I think we have not discussed this point. So there is no need to record that point in writing again, but mention in the terms of audit engagement that refer to that laws and regulation and that management acknowledges and understands its responsibility. If preconditions are not present, that is applicable FRF nahi hai, or the management is not acknowledging and accepting its responsibilities, then discuss with the matter with the management and do not accept if law and regulation does not require you to accept. If there is a limitation prior to audit, then again do not accept if it leads to a disclaimer of opinion, right? If you have accepted and then there is a change, then see whether there is reasonable justification or not. Reasonable is when the circumstances are changed or when there was some misunderstanding, then you may accept. If there is no reasonable justification, for example, like you were not able to obtain sufficient appropriate audit evidence for any trade receivable, and now the management says that do not give an audit opinion, give a review report. Don't do that because this is not a reasonable justification. The next topic, when auditor accepts that, okay, I'll accept the change in the terms of audit engagement, which is going to provide a lower level of assurance because there is a reasonable justification, then it is the responsibility of the auditor to look for assess the legal and contractual implications. And also in the report, do not refer to the original audit engagement, do not refer to the audit procedures originally performed as per the original audit engagement, and agreed on the new terms of audit engagement in the form of a new written agreement. Clear? If let's say the auditor says, I cannot continue with the I cannot continue with the original, and the management says that if the auditor says that he cannot accept the new terms and management says that you cannot continue on the original terms, then first of all withdraw from the audit engagement wherever possible and determine your obligations to report to the various parties like those charged with governance, owners, and regulators. In case of recurring audit, auditor may decide not to send the new engagement letter every time, but various factors like in case of indication that the entity misunderstand the objective scope, revise or special terms, senior management ownership, nature, size has changed, legal regulatory requirements have changed, FRF has been changed, or other reporting requirements have changed, then in that case, auditor can send a new engagement letter all the time. Okay, is it clear, everyone? With respect to audit quality, SQC1 is there and SA 220. That's it. Rest we will be doing in the next class. In case you have any doubt, you can always send in your replies. And again, the last request that before coming for the session, which is scheduled for Tuesday, you should have gone through the module in entirety till page number 11.24. All test your understandings, every question that is given, just go through it, read, try to make your own notes, and then in the next class we'll be completing the topic quality control along with the practical based MCQs, right? In case of any query, please let me know, and thank you for making this session interactive and for being patient listeners. Thank you so much, students. Bye bye. हाँ, done, done. Thank you, Manish. Okay, okay.